The assessment of a trend or of the overall market trend is based upon mere logic and common sense. Note today how after a big down day on Tuesday, the Dow came right back up yesterday and sold off today with greater magnitude, about 300 points. This would kind of lead to the conclusion that the markets may be selling off. However, if you analyze the NASDAQ chart, you can see that it's staying above the T-line and there's really no dramatic selling occurring. So all this really indicates is certain sectors are selling and other sectors are still moving up. This is not rocket science. This is just analyzing the graphics of what's occurring in human nature. And human nature is the most accurate indicator of the markets. You can get a much stronger read for when a sector is ready to turn down. The oil sector was acting well, provided oil prices stayed above the T-line. But as soon as you saw sell signals and a close below the T-line, that told you there was going to be some pullback. That gave you a logical reason to analyze your crude oil stock positions. And if they were creating sell signals at the same time crude oil was backing off, that was a good indication that that was time to take profits. That assessment can be made on each individual stock. Micron was one that we recommended. You can see wave 1, wave 2, and then starting to wave 3 that bounced off a doji off the T-line, indicating that this wave right here was probably going to be the same magnitude as this wave right here. When we saw it gap up and then do a spinning top the other day, or on Wednesday, we started taking profits. Why? Because look where the selling occurred. Right smack dab at the same level they started selling over here. That told us the probabilities that if we started seeing a sell signal in the overbought condition at a level they were selling before, we could start taking profits. Now, what was our worst case scenario? It did another J-hook pattern. We could always buy back if it came back up through this level. What it protects us from is being in situations like this, where they gap it down and start selling it hard. Analyzing patterns makes being in the right positions at the right time that much more probable. For example, you can see in the Amazon chart, the big bullish engulfing signal started this fry pan bottom pattern. And even with the market selling off hard, Amazon was still trading positive. That is a trait of identifying the patterns, because the patterns are usually created by much more lengthy human nature decision making that aren't going to be influenced by what the overall market is doing. So this allows an investor to have much more comfortable positioning in patterns, because they know if it starts to turn, because the market is starting to turn, you probably have a day or two extra to start watching for sell signals based upon the overall market getting soft. That'll be it. We'll see you in the chat rooms.